Patriot Radio News Hour, Joe and Jason on this Monday, and I hope it finds you well. The weather starting to get nice again. We had the golf tournament, the Phoenix Open. It doesn't matter, right? Whether sun, rain or shine, it doesn't matter. The party lives on. And then, of course, the Super Bowl last night. The Chiefs did it again in overtime. At least the game was it was a little boring, but it got interesting at the end. It was competitive. Went to overtime. I guess the third time in 5 years, Patrick Mahomes. I guess we had Tom Brady. Now you get Patrick Mahomes. Next year. How about anybody but the Chiefs? That's what I'm hoping for next year. No offense to Chiefs fans, right? They're great fans. They like to party, but yeah, it's time for something else. What happened to all this parody? Apparently, it's parody for everybody but the Chiefs. Our toll-free number 800-951-0592. The website at allamericangold.com, right? Wall Street just on a record-type rally. We talked about it last week, something we haven't seen since the Great Depression. As far as 14 out of the last 15 weeks, the S&P has been higher. Our president, if you want to call him that, the grand jury decided, hey, we're not going to charge this guy. We charged the other guy, but the big reason was, well, he was nicer about it. Yeah, I mean, he totally took the documents. That part's the same, but he wasn't a jerk about it. And also, by the way, he's really super old and can't remember anything. So there's no point to really charge him because the jury will just feel bad because he really can't remember anything. And I loved it when he did that press conference, was talking about, listen, I was right in the middle of Israel. It was like the next day after the attack from Hamas on Israel. They sent the president to go talk to the special counsel and hey, let the adults in the room handle the Israeli thing because you probably don't even know who the prime ministers are or anything else. And, of course, immediately called the president of Egypt, the president of Mexico. But no reasons to worry. And again, you got to be ready for this stuff. 2024 is going to be the year of chaos, and I think you're going to see a lot of extremes. You're going to see high highs and low lows and everything else in between. But that's why we have Joey join us every Monday. You got your old 401ks, your IRAs. You're getting ready to get into retirement, or maybe you've retired recently, making sure Uncle Sam gets the least amount of your money, right? Getting the majority. You can do it. You can get the majority, especially if you've been a good saver. You can get the majority of that income tax-free if you got the right people handling your money. And that's why we have Joey with us. Joey, welcome. Happy Monday.
Happy Monday. It's great to be here. And I love that we're bringing it up and we're talking about the election cycle and all the crazy things that are potentially going to be happening here in 2024. And, I urge everyone to buckle up because it is going to be a ride. But the most important thing, we brought up taxes, making sure Uncle Sam gets a smaller slice of the pie. I'm always on here preaching that. And as we're entering retirement, it's very important. We're looking at ways to create some tax-free dollars from the good job you've done of saving from your account. So come 2025, the tax laws are going to be reset. They're going to change them. What little people know is, hey, we're actually historically low income tax brackets. We're in debt. We're printing money. Come 2025, you and I are going to have to be paying more tax. Tax brackets are probably going to increase. We're going to be shelling out more dollars to Uncle Sam. I think right now is a really smart time to be looking at the tax game and finding more creative ways to stash their wealth away to grow tax-free, whether it's from traditional IRAs to Roth IRAs to 401ks. We need to make sure, as we're in retirement or we're going to be entering the next couple of years, that we're getting a game plan for these dollars, not only preserving your wealth, but turning these taxable dollars into tax-free dollars so that over time you're paying less to Uncle Sam, and when your RMDs hit at the age of 73, you don't have to pull out half of your 401k and pay taxes. Right? That's a lot of things we're doing with our clients right now, especially this year, is getting a game plan in place to make sure we're siphoning our dollars off into more tax-efficient buckets, as the tax game in the next couple of years is going to be crazy. And I believe that some Americans are going to be shocked about the amount of taxes they're going to be paying moving forward.
Yeah, and you talk about deficits and everything else, right? They're running out of ways to go get this money, and the sunsetting when Trump cut those corporate taxes, right? They also gave all of us a break, but that comes to an end next year. Kind of what you're talking about there. But for a lot of people, they think, well, if I protect myself from taxes, that means I don't get to grow my money. That's not true either.
That's 100% false and incorrect. And I can hear the commercial coming on, so I will touch on that after the break.
We'll be right back with more. Stay with us. Patriot Radio News Hour. 800-951-0592. Joe and Jason on this Monday. We have Joey with us, of course, from Northwestern Mutual, right? Not a bank. They're not a banking institution. Heck, they're not even publicly traded on Wall Street, and yet they've got the highest credit rating in the world of any financial institution. And also the fact, listen, they don't have the $250,000 insurance. They got $500,000. So, your money, think about that. It's not in a bank, and more of it is insured. And on top of that, Joey, we're talking about the fact that a lot of people think, well, gosh, yeah, when I prepare for the tax game, right, my money stops growing. I can't take advantage of growing my money, and that's just not true.
No, it's 100% incorrect. And the earlier you play the tax game, it's the more your money grew tax-free for you over time, whether it's Roth 401ks, traditional 401ks, but you're just siphoning dollars off. You're paying some of the tax today so that in the future, rates increase or whatever it may be, you're never paying the tax again. And as we enter the retirement phase of our lives, we've all walked away from an income. The biggest or the two biggest threats to your retirement are taxes and long-term health care. But if we can mitigate this tax bomb, this tax problem we're going to have a couple of years before retirement and then improve upon that as you are retired, you're going to have money growing for you tax-free. And at the end of the day, it's always my goal. How do we make sure that all of your wealth is tax-free? Now, that isn't necessarily possible all the time, but we want to make sure that we're targeting that tax problem. You're growing your wealth efficiently. It has no hindrance on your rate of return compared to your traditional 401k. It's just paying the tax today, so we're not going to do it later. But to those of you, this has been on your mind. You've been wanting to reach out. You've heard me come onto the radio. You're in retirement. You've done a fantastic job of saving, but you just don't know where to go next. You need to reach out to us and to me and my team. You can reach me at my personal cell, which is 602-909-9048. Again, that is 602-909-9048. So even if you want to have a conversation, ask some couple of questions about what's going on in your portfolio or some things that have been on your mind, I'm always more than happy to sit down and talk with KHNC listeners. At the end of the day, I'm on your side. We're on the same side. Let's help each other grow. Let's build out our communities, and let's make sure that our financial plan is not the reason we're feeling unsteady on a day-to-day basis, because we already know life is hard enough. We're already dealing with all these different personal problems. We want to be those people that can take the burden of your financial plan and really just make sure you're comfortable day-to-day and that you know exactly where you're at moving forward.
There you have it, Joey. Thanks once again for joining us. 602-909-9048. Take advantage, right? Like Joey said, hey, this is the lowest taxes have ever been and probably ever will be. It's a great time to get this tax plan taken care of. So make sure you reach out. Again, 602-909-9048. Joey, thanks for being here.
So, thanks for having me. Happy Monday to everyone, and I hope everybody has a great week.
You know, in other news, listen, we got a lot. We've got Fed governors this week again, so second straight week with a lot of Fed activity. We got CPI, PPI, retail sales. It's going to be a pretty busy week, and the bankers are squawking again, right? Commercial real estate problems all over the world. Jamie Dimon and now the CEO of Bank of America joining in, talking about the debt problems. Washington facing a global rebellion, according to Jamie Dimon. Bank of America CEO Brian Moynihan says that it's time to stop admiring the problem and it's time to actually do something about it. And then Nassim Taleb, he wrote The Black Swan. What a great book, The Black Swan. If you never read that, going back in time, that was like in the early 2000s, the unexpected thing. He's like, forget about that. This thing's a white swan. We're already into what he calls a death spiral. And even Jay Powell, Jason, said that it's past time to have an adult conversation about fiscal responsibility. So I guess that means Joe Biden's out because, let's face it, the adults want him in the corner.
Yeah, well, the things that are happening should be looked at seriously for sure, and probably if you're listening, you should be making your moves before today. So the fact that you have an opportunity to make some moves today and maybe in the next weeks or months to come, it's an opening, but it's a door that's fast closing. Inflation does weird things, and we've had elevated inflation. And the ability to move money into assets before they spring upward, Joe, in price is really important. And then, of course, if your money is in the wrong place, you may lose a lot of money because the markets are going up. And we had mentioned that this might happen, a little bit of a burn upward, but things are not healthy. The top 10 stocks that are 69% of the entire market, eventually guys are going to want that money. At some point, they're like, you know what? Maybe I should get some gold, sell some shares, right, Joe? I need to put my money here. I need to buy some. Hey, the property prices are crashing in blah 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 state. I'm going to go buy some stuff. That money will come out of the stock market when they've sold every bit of all the small stuff. There's going to be a need, Joe. There's going to be a need, and we see it. This doesn't always go straight up. It never does. So. Jamie Dimon sees it. He's been telling everybody. He doesn't want anything more than to say, "Hey, I was right." All these guys, they want to be right. I was right. I told you. Even if it happens in a year, he's going to say, "Well, I was a year ahead, but I was right." It's not that hard, Joe. This is the way it's been for a long time. It's just with the debt and the inflation, it's just a severe situation that it's a lot more harder to predict at this point. The timing.
When you look at things now, household debt, right? So again, we're focusing on debt, right? National debt. The stock market, right? That's a debt market. There's a lot of debt out there. Household debt now approaching $18 trillion. And of course, we've been talking about all of a sudden, credit card defaults up 50%. auto loan defaults continuing to be on the rise. Just in the fourth quarter alone, household debt grew by over $200 billion to a new all-time record high. And if you go back just to 2019, tells you how fast, how much debt was created. Household debt, Jason, was up almost $3.5 trillion just in the last 4 years. And when you think about the number and the amount, right? This is what happens with boom and bust, right? You build the bubble. What's the bubble? Large amounts of debt. Well, what happens at the end of the cycles, right? Well, everything peaks out, right? The stock market will peak out, consumer debt peaks out, and then all of a sudden, people start having a harder and harder time making their obligations. At the same time, we already got a commercial real estate problem. And Jamie Dimon, he's talking about a rebellion. You know, he knows, listen, he used that word for a reason. And what he's talking about, not only is it just our national debt. You got to remember, right? China's got a debt problem. Japan's got a debt problem. Europe's got a debt problem. Consumers got a debt problem. We're looking for adults in the room as the federal government, right, keeps spending at record paces. When you think about Medicare, Medicaid, Social Security, defense, and interest on the debt, you're talking about $5 trillion. Before we spent a single cent on anything else. Right? We haven't paid for judges. We haven't paid for the justice system. We haven't paid for the education system. We haven't paid for anything. We haven't paid the Congress, the senators, and everybody else. There's no money, no food stamp money, right? That's not in this money. It is incredible. We've never collected anything close to $5 trillion in taxes. So, Jason, when we look at the problem, the answer really is pretty simple. We've created another huge debt bubble. The only thing we don't know is when does it burst, right? And that's really what we're starting to hear all of these people say. Hey, listen, I'm going to be right. Right? Am I going to be right in 3 months? Am I going to be right in 6 months? Am I going to be right in 12 months? It really doesn't matter because as they've all kind of said it, this is the easiest problem to see, Jason. It's right in front of everybody's face, and it's just a matter of when does it finally blow up.
That's correct. That's correct. And we've had these before. I mean, in 2020, when Corona was here, you know, we knew it was going to happen. You know, the emergency ended up being COVID, but in 2019, the repo market showed that some of these big banks were not able to cover their loans. Remember the overnight interest rate spiking up, Joe, to 10%? Somebody wanted blood, right? Somebody's like, hey, here's a chance to take down the competition, and then the Fed stepped in. And then what they have? They had a massive crash, something they don't talk about. We had a massive market crash, massive. Everybody ran for the hills. Well, what's it going to take this time, Joe? What's the emergency? What's the smoke screen going to be? Because it's setting up. So what you just said is right. Well, you know, when's it going to go? Well, just keep reading the tea leaves. I mean, it's what I've said many times in past years. It's better to be 1 year early when you buy gold and silver than to be 1 day late when it comes to the spiking prices, Joe. And it sure looks like things are getting ready to move in 2024. I mean, things just get funnier and funnier as we just moved to the end of March, and we're still here in the middle of February, Joe.
Yeah, and when you start looking at what it is that big money is doing, let me just give you an example when we talk about investment demand. Investment demand in gold in India, Turkey, the United States, you're talking about increasing by 185, 160 in the U.S. Investment demand for gold increased by 113 tons. And you got to remember, 1 ton of gold is 32,150 ounces, and you're talking about 113 It really is, Jason. It's hard to understand just how much gold is being bought by big players. That you're talking an increase of over 3.6 million ounces of gold. That's just the increase. And it's globally, right? It's everywhere you look, and I think that's kind of what Jamie Dimon was talking about, right? It's a global debt problem.
Yeah, these central banks they work together, and the banking system as a whole works together. Maybe your local small bank isn't really key to all the information, right, Joe? They're expendable. But yeah, they're all in on it. It's all baked in, and it's all ready to go, Joe. Whether it needs to go up, whether it needs to go down, and the average guy listening to the show, you're not going to be cued into what's going to happen, how it's going to happen. The average person will tell you they didn't see the coronavirus thing coming, and the massive crash that happened. But there it was, right, Joe? Shouldn't be surprised when it happens again, right?
By the way, when we return, not only a great special, another country gets downgraded. This one, for the first time ever, I'll tell you who. 800-951-0592. Joe and Jason on this Monday. The Dow is up 200 points on its way to 40,000, 38,800. The S&P up 21, 5,047. The NASDAQ up 80, 16,000 in change. The 10-year note 419. Crude oil just above unchanged, just below $77. Gold's down 9, 2015. Silver's higher again. Silver kind of bucking the trend here, 22.70. And again, be ready for a very turbulent market. Being diversified is what is going to get you through the best. Check out our friends over at YRefi, up to 10.25% fixed rates of return. Not correlated to the stock market, not correlated to the Federal Reserve, none of those things. There are no fees. You can turn your income on, you can turn it off, you can do whatever you want. Compound it. Check them out. InvestYRefi.com, or just call them at 888-YRefi-24. Moody's over the weekend downgraded Israel's credit rating. Now, Israel, first time since they've been a country that they've gotten a downgrade. They're now at A2, which, that's not great. To give you an idea, that puts them with Poland and Chile, and saying, hey, war and the fact that the United States has yet to give them any aid, Jason, just another example. The whole world has a debt problem, and it's kind of ironic, isn't it? One of the big problems, obviously the war, that doesn't help, and that slows the economy, but you're not getting aid from another country that's got a debt problem. Right?
Don't they all have debt problems? That's the whole system, Joe. But yeah, I get it. It's that's why they have wars, right? The bankers are on both sides usually. So we'll see what happens, Joe. Sometimes it's hard to repeat this stuff day after day, but it's the same old song, but it's just a new tune, right? It's it's why we do what we do. Debt is something you just don't want to mess with. It's slavery, Joe. It just puts you at somebody else's control, and it's you're just mentioning this right now with the country, right? Whole countries are under control, right?
And again, the need for diversity. $20 gold. We started this special Thursday. Friday, we weren't on Friday. There was almost like a nationwide outage in the cable provider that we use that it's not like we have choices, but that we have at the radio station in Johnstown, which when the internet goes down, that's kind of how Jason and I connect and make everything work. So we weren't able to do a show, but we've had, gold prices lower. So I've lowered the 20s to go with it. And again, once these are gone, because this was a deal, remember we talked about it on Thursday, a father's, helping a son out, trying to help him save his business here. We still got close to 120s left. Here's the new pricing. 1 through 9, $2,160. 10 through 19, $2,150. 20 or more at $2,140. I mean, gold was $2,040 like Wednesday of last week. I mean, you're barely $100 over spot right now. What is $125 over spot if you're buying 20 or more on the 20s? Heck, even if you only can afford one, how close to spot you're able to get, it's a great opportunity. We wouldn't be here without that, right? If we were in the regular markets, listen, the wholesalers, $20 gold price hasn't gone down. I mean, gold's down $20, but, and again, $8 down today, but between Thursday, Friday, and today, down about $20. $20 gold price hasn't gone down at all, Jason. I mean, you're still talking about, over $2,200 normally. So this is a great opportunity to get in at a much lower price.
That's correct. Yeah, get these $20 gold pieces if you have the means. Get as many as you can. When gold gets ready to go, which it's getting ready to go, it's going to go fast. So, like I said earlier, is it going to happen this week? Is it going to happen next month? End of March? Is it going to happen later this year, next year? It doesn't really matter. This is where you hold that all that value, all that hard work, that sweat, blood, and tears for you to save that little bit at the end of each month. And instead of just leaving it in the bank and letting inflation just tear it apart, or gambling at some meme stock or something else that is an investment that if you don't know what it is, you're really taking a big risk. If you want to save it in gold and silver. If you're cashing in and getting ready to cash in some tax returns this year, this is a great place to put it until you decide you want to do something else with it. And I had a customer telling me, hey, you guys don't talk about buying. We do buy. There's not really a lot of reason for Joe and I to be talking about buying. We have a lot of people selling, and we do buy. Well, we'll take care of it. But when there's a lot of people selling to us, and that's happening, that's showing you that the place you want to be is buying. You need to buy, especially when a lot of people are in the position that they have to sell. The squeeze is coming, Joe, right? The squeeze is on. And you can get $20 gold pieces at these just remember what it was last year, Joe? The premiums on all this stuff. People are paying $18 an ounce over for silver eagles. You remember that? You're almost losing an ounce of silver for every ounce you were buying because the premiums were so ridiculous. Well, because everybody's the stock market, it's so great. Let's just move our money and the other assets, throw our money in there quick. Well, here it is, cheap gold and silver. It's just laying there in front of you, and you're stepping right over it if you're going to go gamble it. But when other people are selling it, Joe, it's time to be buying it.
When gold was like $1,800 during COVID, right? You were paying way more than this, right? It just tells you. These are the lowest premiums so far by a huge margin. And like I said, it's kind of a little bit of an anomaly. But, yeah, it is funny how a higher stock price gets people thinking that everything's wonderful. And really this is kind of what we've been talking about, right? This is what we see right before crashes, right, where this euphoric type, oh my gosh, everybody buy the same 10 stocks over and over and over and over again. And then, here's the funny part. It works right up until it doesn't. 800-951-0592. Jason and I will be right back after the break. 800-951-0592, Patriot Radio News Hour, Joe and Jason. And we're talking about debt and the issues with debt over the weekend. All kinds of banks throughout Asia saying that they have commercial real estate exposure problems. So, Jason, even though it's kind of ironic, right? We've got Wall Street rallying with the banking crisis brewing underneath, but there's a lot of things brewing underneath the market. And we've been talking about, the breadth of the market, the fact that we have more decliners than advancers, even though we're hitting records. And now, over the weekend, even more banks all across the globe saying, yeah, we've got exposure here.
Yeah, and when unfortunately when the banks when there's real heavy stress on the banking system, that ends up affecting everything. When money starts to freeze up, Joe, right? What's the first thing people do? They go sell everything off, circle the wagon, so to speak. And the stock market won't stay high. If the banking system really starts to fall apart, like it just keeps on showing cracks, right, Joe? When the dam bursts, you're going to see a big rush to the window to sell assets and solidify the position. Where's the solid place to go? It's gold. It's gold. Why have the central banks been buying record amounts while everybody else is circling around, not knowing where to put their money, Joe? The central banks have been, the ones that we don't like, that control governments and tell people what to do and what the laws are going to be. They're solidifying their position. It shows that they're not even really, central banks don't want gold, do they, Joe? They don't want gold. Oh, they buy what they need to buy. They buy what they need to buy.
They hate buying it, but they know that they have to. How about last week? And we've been talking about the states, more and more states getting rid of taxes on gold. Iowa last week, the Senate subcommittee recommended passing of a bill that would establish a state-issued gold and silver transactional currency. So here we go. This is another level, right? Iowa is starting to say, hey, you know what? You need to give people options to do something other than dollars. It's one thing when we come out and say, hey, listen, Saudi Arabia is taking renminbi for crude oil. It's Qatar is taking euros or Russian rubles or Indian rupees or Chinese renminbi or whatever it may be for oil. When Iraq comes out and says, hey, maybe it's time we ditch the dollar, that's one thing. Now we have at least one state, my guess is a lot more than that, saying, hey, you know what? We recommend that we start minting our own gold and silver and allow for our citizenry to decide if that's what they want to use as currency, right? Hey, something else other than the dollar, because let's face it, I think they understand that, Jason, the dollar's a fool's game right now, isn't it?
Right, and if these states start to lack confidence and the federal government's ability to protect them, because let's face it, all these states are also in debt, right? And I think a few of them are like, if they have some good representation, they're probably looking around like, we don't really want to be around the federal government's debt. Wait a minute, what if they don't pay us this money we need? What if their debts and their problems become our problems? And so that what you're talking about in Iowa, that sounds like a little bit of distancing from the federal government, doesn't it?
Yeah, and they're talking about, and again, it's not that they would need to use gold and silver coins. They'd probably create a note, a gold-backed note, a silver-backed note. They're talking about, hey, the state should create its own bullion depository. In the meantime, they could use the Texas bullion depository or a similar depository that was established in another state. But again, Jason, it just tells you that it's another one, just another sign that, listen, the dollar's coming to an end. Whether people want to admit that or not, that's solely up to them. But people are figuring this out, and leaving your money in the bank, right? That's just a dangerous game. Not only do you have to worry about inflation, you have to worry about bank runs, you have to worry about the FDIC, the Treasury, right? You have to worry about all of that stuff.
You know what you call a gold depository, Joe, when you get to take your money and put it in there, right? Or if you want to pull the gold out, you pull it out. That's a bank. I like the way they call it a depository. If you can put your Federal Reserve notes in there and load a gold up into your account, and then if you want, you can pull your gold out of it at some point. That's a bank. You know, it's funny how, we have to use all these other words, but that's
almost
a bank.
Like a state bank. Yeah, like a state bank. We're going back to the way it used to be, right, Jason?
Yep. Yeah, when Andrew Jackson closed down the second bank in the United States, he destroyed and eliminated the Federal Reserve at his time. It was amazing. He paid off the national debt, the only president to do so. There was tariffs coming in from foreign countries, and there was Western land movement. So there was this wealth coming into the federal government, which had no federal income tax, by the way. No federal income tax. They didn't have a usage tax. They sold off federal lands and they tariffed countries for bringing their stuff in or stuff going out. And what did Andrew Jackson do after he paid off the national debt and he had all this surplus? He's like, well, this is the people's money. I will distribute it equally into the state banks. So of the states that existed in the 1830s, he just put it into the state banks and made the country wealthy, Joe. It's amazing that you can do all that with no percentage tax on your goods and services, no federal income tax. Paid off the national debt and gave money away.
800-951-0592. Get those $20 gold pieces. Jason and I will be back up, right back here, wrapping up this Monday. $800-951-0592. $20 gold pre-1933. $20 1-ounce gold pieces 1 through 9. 2160. 10 through 19. 2150. 20 or more at 2140. We have less than 100 of those remaining at 800-951-0592. This week, some experts weighing in. Jeremy Grantham, the Nobel laureate. Don't be fooled. The stock market is going to have a tough year. U.S. stocks are almost ridiculously higher priced, calling this a super bubble. We'll see how it plays out. David Rosenberg, the bull market and complacency will unravel as the recession few see and even fewer are positioned for comes into view. He said the 2022 stock market plunge, remember it got close to 30,000. He called that an appetizer for what's to come. Jeffrey Gundlach, stocks and other assets are on fire and rallying like crazy at a time when more and more Americans are falling behind on their bills and the embattled commercial real estate industry is getting worse and worse, calling the markets lazy and complacent. And Gary Schilling, stocks are very, very expensive and very distorted, adding the S&P could crash by 30% or more. Jason, a lot of people now kind of starting to line up, aren't they, saying, hey, wait a minute, the math here just doesn't add up.
It doesn't, Joe. It doesn't. And there is one thing. There is a huge wealth divide that's continuing to happen. The haves and the have-nots are happening. So you got to look at the stock market going up. Well, there's some big money going in there. There's speculation. It doesn't matter if you're a rich dude or if you're a poor dude. There's a little bit of betting going on what's happening. And when you see the stock market going up and you see all the numbers that, Joe, that you report, credit card debt going up, delinquencies going up in credit cards and school loans and all this other debt instruments are bad, and the banks are weakened in their ability to stay afloat. Well, it's just showing you that there's a tremendous amount of weakness, and it is Main Street, Joe, that's suffering, and Wall Street and the big money. How many times do I say the peanut butter jar, right? That money's going. That money's out. When you have the Jamie Dimons screaming about how bad it is, and he removed and sold. I think was it the first time he sold a bunch of his J.P. Morgan stock ever, selling hundreds of millions of dollars of J.P. Morgan stock, right? Warren Buffett sold a bunch of his stock. These big players
selling $2 billion worth of Amazon stock. Right there, the list is getting longer.
And that doesn't count trading. What do they trade out of some of the lower stuff, the more lucrative stuff, and put it into, Apple, or Walmart, or these big companies that are going to weather the storm better? Selling the stock is putting it, back in the bank or putting it somewhere else, buying things. But trading, Joe, also, how much do they trade? How much of the small stuff are they out of? It's happening right now. Go ahead, go buy some stock if you want.
800-951-0592 or buy gold at super low premiums. We'll be back with the half-empty cup coming up next.